Now, let's talk Titan because they've seen a double-digit same-store sales growth. They've also seen new brand investments, value addition as well in the new businesses. So let me welcome in Mr. Subramaniam, the CFO, with us on the show today. Mr. Subramaniam, thanks for joining us. It's been another very good year. Tell us what stood out and what's helped you ride some of those liquidity fears and issues that are otherwise prevalent in the market, because your shareholders are quite pleased with the sort of returns the stock has been giving.
Well, I think primarily it's to do with the market share gain that we are getting. We've been repeatedly saying that the market itself has not grown much. The industry, the jewelry industry particularly, has been going through quite a tough time over the last couple of years. So the changes in the environment, along with the initiatives that the company has taken, success of some of the initiatives like the gold exchange program, which both are giving us customers, also de-risking us from having to source gold from outside India. All of these, I think, put together are ensuring that our market share gains have been steady over the last 2-3 years now. And I think that's been the major reason why I think the performance has been quite good. And it's just not been the jewelry business, it's also been the watch business where the growth has been into double digit now after a long time, and the eyewear business again, growth in the ballpark of 20%. While of course their profitability, we have taken a call that we will invest everything that we are getting back. But overall, I think the market share gains and a good traction on top line has helped us.
Okay. Mr. Subramaniam, you know, after 3 years of 20+ jewelry revenue growth, do you see that continuing as well?
I don't know. At least we are targeting that. I can't say that we will always deliver what we target. It is not easy. It is tough, as I said, when the market itself is not growing much. Even the last 2 months, our feeling is that we are gaining shares considerably, but it's always difficult to do it when the market itself is not growing. So 20% is a good target to set ourselves. How much we achieve is going to actually depend on the customer at the end of the day. So yes, as I said, we will push for that, but it's possible that if the economy does slow down, that may not be achievable.
Right. Also wanted to understand, is penetration then featuring on the agenda for 2020, especially in states where, you know, small stores are very dominant and they have a very dominating presence too?
Well, penetration has been the theme for the last few years. I think if you look at this year, fiscal year 19-20, we are targeting to open something between 60 to 70 stores of Tanishq, and most of these stores are going to be in actual small town India. We have stores in places with population of 20 to 50,000, and lots of them actually now. So and we are seeing very good traction. So the good news is that the brand is something which is very aspirational and also relevant to rural India as much as it is to urban India. So the traction has been good in these places, and we are therefore getting into so many towns today that you know, in a way we are trying to advance our reach into smaller town India ahead of what we had initially planned about 2-3 years back, because of the opportunity that we see right in front of us. And I think sometime back you did allude to the financial status. Fortunately, we have a good balance sheet, and therefore this allows us to be able to invest significantly in a situation where most of the industry is actually reeling under a financial crisis, and particularly liquidity crisis. So this is a great opportunity to actually roll out as much as we can.
Also, we understand there are a number of wedding days in FY20, plus studded jewelry as well as wedding jewelry contribution is only increasing day by day. What is the contribution now, and where do you envisage it, say, a year down the line?
Wedding dates, yes. I think I understand there are more wedding dates this year, which basically means that the occasion to buy gold is more, and therefore one hopes that the industry would see some sort of a reasonable revival this year. One is expecting that as such. But as far as studded diamond jewelry is concerned, it's something which is a separate initiative. Where we are trying to push jewelry for adornment rather than for savings. So wedding jewelry particularly is basically plain gold jewelry, and it has a significant savings bias, whereas diamond jewelry is obviously about adornment. So we do both simultaneously, so the focus on both these sectors are there. And therefore the share has generally been in the ballpark of around 30%. I mean, the diamond studded jewelry share has been in that ballpark. So despite the growth that we are looking at in the wedding segment, we are also seeing good growth in the studded jewelry, which is why our share has been generally in the ballpark of 30-31%, which is a good thing for us. So we are quite happy. We are not really pushing for diamond alone at the cost of wedding jewelry. And you can see that the margins are actually getting better due to operating leverage.
Sure. Tanishq has managed to show great pricing power with gross margins over 20%. According to you, again, what makes it really stand out, and how do you manage to sustain that even as you continue to open new stores?
I think this is something that we addressed about 3 to 4 years back, where we did realize that we were at a premium which possibly was not something that the customer was willing to pay for. So we changed our making charges and the collection that was available at the store. We made it far more relevant, and today therefore the price value equation is far better than what it was earlier. But the good news is that even though we focused on wedding jewelry, the making charges there are higher because of the complexity. And since wedding jewelry by itself has found more and more customers, and which also started with the perception change on the pricing itself, I think it's helping to keep our gross margins practically the same as it was before this change happened. And that's basically the reason why you're seeing an EBIT margin improvement. So our pricing today, I think the price value equation is looked upon, and of course then there is the trust factor, which always has been a plus point for Tanishq and Titan. The Tata name brand and Tanishq itself has been there for so long, particularly after issues like the Nirav Modi scam on the diamonds. People would not hesitate to pay some premium when it comes to buying authentic stuff. So I think that's where we gain as well.
So Subramaniam, just stay with us. We're going to come right back to you. Just take a look at what the market is then up to, and just quietly positive. There's no decisive move really in the market. We're just lingering around that 11,950 mark. The breadth as well, not a very conclusive, decisive move. It's favoring the advances so far at least. 112 stocks standing to the upside to about 85 odd to the downside. It's Jet Airways, Reliance Infra, Reliance Power, Indiabulls Housing, Repco Home. These are the names which are really taking a beating. In fact, Jet, as I speak, is down a good 16%. PC Jewellers, of course, is holding out. ONGC, Bharat Financial, Tata Motors and Infibeam are names which are seeing some gain. But back to Mr. Subramaniam. Mr. Subramaniam wanted to discuss gold prices. They've seen a very big surge recently. They're at a 6-year high of late. Explain to our viewers, what is the impact of higher gold prices on Titan's jewelry business, especially since your gold sourcing is quite different from that of a traditional jeweler?
Actually, gold is more seen as a pass-through in our business, in the sense that since we hedge our gold 100%, our buying rate for gold and the selling rate is essentially the same. We may have markups on gold, that's a different issue, but effectively we hedge in such a way that we buy and sell at practically the same rate. So it's a pass-through. Now, typically what happens is when gold rates do go up, we do see customers postponing their purchases in the hope that by the time they really need to buy, for example, if it's for an occasion like a wedding or for Diwali or something, they may wait till the last minute to buy. So that postponement does tend to happen whenever gold prices go up. But eventually they do end up buying. So therefore there could be shifts from quarter to quarter when gold prices do go up. And the second aspect, of course, is that whenever gold prices go up, the overall grammage may come down because people tend to go more by a budget spend rather than the number of grams that they want to buy. And the reverse happens also when gold prices actually fall. The grammage does tend to go up. And therefore, I think it's a sentiment issue. It does result in some delays, but it's not for too long.
Okay, Mr. Subramaniam, thanks so much for joining us this morning. Always good chatting with you and understanding the latest developments at Titan and also trends in the industry.